Good morning, everyone. This is Michelle Schneider, Mish, Chief Strategist at MarketGauge.com on behalf of Stock Charts and Stock Charts TV, presenting you your daily five today. Now, it does not take a genius to understand that right now the market is having a lot of pressures, considering pretty much everything. And so I thought it would be good to focus on the retail sector. As you know, regional banks are part of the economic modern family. And the fact that the regional banks have taken center stage and are unraveling with a new bank up for sale at a fraction of the price every day, it's put a lot of pressure on the market. But what's so interesting is that the retail sector, although it has been beaten to a pulp, there are aspects of it that have been stronger than others, number one. And number two, if we just look at the general indicator of XRT, which is our granny retail, if her grandson regional banks has anything to say about it, it will trickle to the consumer, and that won't be good. However, it's also possible that there'll be a separation between what's happening with the regional banks, or something could happen to government intervention or what have you, and the consumer, which on the ground looks amazing, but on the charts looks wonky, could actually hold major support. So that's what we're going to do today, is we're going to explore XRT and then a few of the stock picks that are within the basket: Sprouts, Amazon, GameStop, Carvana, Kroger, and Costco. So let's get started. So here we have a chart of XRT, and you can see right now it's trading at a low of 59.43 as I'm talking to you. Actually, this is a weekly chart. I'm going to switch it to a daily chart. Here you go. But we've been down here before. Actually, just a few days ago, we were down at 59.46. And if we go back down to March 24th, we were down at a low of 58.97, a little bit lower where we are now. Now, I'm not saying that's necessarily good news, but we have reached these levels before. And of course, we're in a bear phase. And what's certainly the case is, if I showed you a monthly chart, which I don't have time to do today, so you'll just have to trust me on this one, 56 to 57 is the 80-month moving average, which of course we know has terribly broken down in KRE, the regional banks, but is still holding here. And that'll be a very, very interesting place to see if it can hold or not, because that would be the line in the sand towards predictive of more recession than stagflation, which is what we have going on. So in terms of the ACP market gauge plugins that have been so helpful in keeping us on the right side, you can see obviously is well underperforming the SPY. And yet, it's holding from the low when the prices was just a little bit higher in terms of leadership, which is showing some of the weakness in SPY. And on the momentum indicator, we are actually a little bit of a divergence here, because you can see it's holding on to the 200-day moving average. That's the green line, where the price is well below. So what does that mean? Nothing yet, but it could mean that if we can actually get back through 60, maybe XRT has gotten a pass on total collapse. So let's go through some of these stocks real quick. The first one is Sprouts. Sprouts obviously looks very different. So you can see the need for food and consumer staples has been the strongest aspect, but we did have a big reversal pattern here when it got up to a high close to 40. And so now, so far as I'm speaking to you after a big down day yesterday, we have maintained the gap. So to me, it's going to be all about if it can hold up over, let's say 35, whatever this high is right here. Let's take a look. 35.67. If it can hold 35.67 and do some work here and go back up, then that would be a good sign, not just for Sprouts, but also maybe it means that the market is holding up better than we think. Here you had your breakout over the Bollinger Band, but this is really clearly outperforming the SPY. And then on the momentum, we had a mean reversion because it broke down under the Bollinger Band on momentum, and yet it's still pretty well high above the 50-day moving average. So I don't see any major diversion. So basically, I would say with this one, if we can probably get back through 38, that's a good sign. If we break down but don't fill the gap, that's a good sign. And obviously, if we fill the gap, not such a good sign. So just staying in that space, let's look at Kroger. Kroger is one that I was very interested in if it breaks 50, and you can see why. So far, we've had 3 tops at 50. Kind of reminds me of the gold chart a little bit. This is very, very strong, definitely outperforming. And also in terms of the momentum, not quite as strong as the price, but still holding over both moving averages. And so with this one, we had an inside day. If we get a close under the low of 2 days ago, which is 48.76 today, so far that's holding, that would probably be a sign of more weakness. We might even see a move all the way back down here, depending on market conditions. However, if it holds above that 48.76 and closes above, I'd keep an eye on this because, again, maybe I take a taste, but over 50, I see this can actually probably go up about $3 to $5, depending on what happens with the overall market. So the next one we've got here is Amazon. And we know that Amazon reported, and it's done pretty well. You can see that it got up after the earnings report up to around 110 and has sold off since. But it's really stuck in a strong position. So this is what I'm talking about, the essential consumer staples and Amazon, which has exposure, obviously, to lots of different things. It mainly had lost money, not because of its retail end. And so what's happening here, we have a good amount of support above the 50 at 99 and a good amount of resistance right now up around 110, outperforming. But the momentum really is not great. So I don't know if I necessarily would want to be a buyer of Amazon right here. I'd be more inclined if it can get back down around 100, or if we take back out, I'd say 108. So between 100 and 108, we could see chop. Over 108 looks interesting. Next one is GME. And of course, this we know has been a meme stock in the past, but this obviously not doing as well. You can see we've broken down underneath the 50-day moving average, but we did find some support here. Obviously, this gap has been filled, so that's not such a great sign, underperforming the SPY. But coming back a little bit in the momentum, over the 50 where the price has not. So I keep an eye on this because if it holds over the 50 on momentum and can get back over the 50, which is at around 20 on the price for a couple of days with a confirmation, you might have actually good risk down to around under 18 to see if this thing has some legs to get back up to the highs where it was at in March. Next one is Carvana, just because that also is such an interesting stock to look at. This is the parking, and right now you can see that this too has broken down, obviously in a bear phase, getting some level of consolidation, underperforming the SPY. But another one to keep an eye on in terms of momentum, because even though the price has continued to go down now, going sideways, the momentum is actually showing some signs of life. So as we go into next week, especially if the market stabilizes and the momentum clears in the indicator on real motion, and this gets back through 750, I don't know, it could be a quick dollar risk and to see what happens from there. Next one and the last one is Costco. And, Costco is another staple that was doing well, but now you can see it's having some pressure under the market, under the 50-day moving average, really on par in terms of its performance with SPY. And most interesting is that it is now sitting right on the 200-day moving average on momentum, looking weak. So it's possible that if the market gets hit enough, even Costco, as much as it has cheaper prices, and when you go there, it's always crowded. In terms of the reflection of the price, it's possible that it's going to be feeling some pressure, whether it's from inflationary pressure, whether it's from recessionary pressure. But if it can't get back through 50, I would be probably more interested to see what happens to Costco if we start to make another run near those March lows. If it can get back through 50 and the momentum gets back through 50, then I think you would have a pretty tight risk to under, let's say, 484-ish area to see if we can get back over 500 and beyond. Okay, so as you can see, it's a very mixed bag when it comes to the retail space, but keep your eye on Granny, as I think that could be a very next key in terms of whether we have more downside in the overall market or whether this was just the pressure due to the banks and we'll have a reason to actually come in and start buying things at cheaper levels. Thanks so much for watching, and bye for now.